Tired of the daily grind and looking for a way to break free from the 9 to 5 rat race? Well, I have some fantastic news for you. By making just 2 strategic investments this year, you can start living your life on your own terms and never have to work another day in that dreaded office again. If you're anything like me, then you've probably dreamt of escaping the monotonous routine of a 9 to 5 job and finally enjoying the freedom that comes with financial independence. And guess what? It's not just a fantasy, it's an attainable reality. In this video, I'm going to reveal the 2 game-changing investments that will pave your path towards liberation from the traditional work system. So let's get into it. Investment option number 1, stock market investing. Have you ever wondered what it means to own a stock in a company? Well, think of it having your own piece of company as a common shareholder. You become a part owner and get to share in their success. Now, here's something interesting. When you own common stocks, you actually have the power to vote on important decisions the company faces. It's like being part of a big decision-making club. Most companies give you 1 vote per share your own. So the more shares you have, the more influence you have. But that's not all. Most companies give their stockholders dividend payouts. These payouts are like little cash rewards on top of the stock's market value. It's like getting a bonus for being a shareholder. These dividends provide investors with a regular stream of income, which is pretty awesome. The cool thing is that the amount of dividends you receive can change depending on how well the company is doing financially. So, if the company is making good profits, you can expect those dividends payout to be higher. You know, stocks are quite an interesting asset when it comes to investing. They can bring both growth and income to your investment portfolio. But here's the catch. Stocks are considered a risk asset. That means they can be quite volatile in terms of price fluctuations. For beginner investors, it's important to carefully consider the level of risk they're comfortable with. You see, with stocks, the potential reward is often directly related to the level of risk involved. The higher the risk, the greater the potential reward. However, it's crucial to keep in mind that there's always a possibility of losing money if those high returns don't materialize. The good news is that history has shown stocks to be a reliable asset class when it comes to generating strong average returns over time. So despite the ups and downs, stocks have proven to be a worthwhile investment option. 2022 was quite a turbulent year for the market. We witnessed a significant downturn, mainly due to the highest inflation we've ever seen in 4 decades. This led to steep increases in interest rates and sparked concerns about a potential economic downturn that are still lingering. Interestingly, a major driving force behind the market's performance has been the boom in artificial intelligence. Companies operating in this space have been making waves and delivering impressive returns. Stocks like Nvidia Corp, Microsoft Corp, Alphabet Inc., and Taiwan Semiconductor Manufacturing Co. Limited have all experienced substantial gains year to date. The stock market is a prime example of how swiftly things can shift. We've witnessed a notable trend reversal that highlights the dynamic nature of the market. Take the S&P 500, for instance, which represents a collection of major US stocks. It has experienced quite a turnaround, climbing by 11.8% up until June 8th this year, following a significant loss of 19.4% in 2022. If you had invested in individual companies or the entire index through an index fund at the beginning of last year, your investments would still be considerably down. To invest in stocks, start by opening a brokerage account with major firms like Fidelity, Vanguard, or Charles Schwab. Transfer funds from your bank account to fill trades in your brokerage account. The amount you invest depends on personal factors such as savings, financial goals, and risk tolerance. Develop an investing strategy for market volatility. Decide whether to invest independently or seek guidance from a financial advisor. Consider stocks suitable for beginner investors and utilize dollar cost averaging. Understand when to sell a stock. Remember that although the stock market generally grows over time, there are short-term fluctuations that carry risk. Warren Buffett, widely regarded as one of the greatest investors of all time, has become synonymous with the value investing strategy. Buffett's approach is centered around seeking out undervalued companies that possess strong fundamentals and long-term potential. He emphasizes the importance of thorough research and analysis to determine the intrinsic value of a company, focusing on factors such as earnings, cash flow, and competitive advantage. Buffett believes in buying stocks at a discount to their intrinsic value, allowing for a margin of safety. Rather than chasing short-term market trends, he takes a patient and long-term view often holding on his investments for years. This disciplined approach has proven incredibly successful for Buffett, and his value investing principles continue to be revered and followed by investors worldwide. Jack Bogle, the legendary investor and founder of Vanguard Group, revolutionized the investment world with his advice on low-cost index funds for diversification. Bogle believed in the power of simplicity and long-term investing. He recommended investing in low-cost index funds that track the performance of a market index, such as the S&P 500, as a way to achieve broad diversification and market exposure. Bogle argued that instead of trying to beat the market through active trading and paying high fees, investors could capture the overall market returns by holding a diversified portfolio of low-cost index funds. He believed that the key to successful investing was to keep costs low and remain disciplined. Bogle's advice on low-cost index funds has resonated with millions of investors, as it offers a straightforward and cost-effective approach to building wealth over the long term while minimizing risk. Enjoying this video? Give it a thumbs up and share it with your friends and your loved ones. Don't forget to subscribe and hit that notification bell to stay updated with our latest content. Now let's jump right back in. Investment option number 2, real estate investing. Real estate is the real deal. Real estate investing offers a wide range of benefits that make it a popular choice among investors. One of the primary advantages is the potential for long-term wealth accumulation. Real estate properties generally appreciate over time, allowing investors to build equity and potentially generate significant returns on their investment. In addition, real estate provides a reliable and steady stream of income through rental properties. Rental income can serve as a consistent cash flow, providing financial stability and potentially exceeding the returns of other investment options. Real estate investing also offers favorable tax benefits, including deductions for mortgage interest, property taxes, and depreciation. Moreover, real estate investments can act as a hedge against inflation, since rental income and property values tend to rise with inflation. Successful real estate investors, including notable figures like Robert Kiyosaki and other renowned investors, provide invaluable insights and wisdom for aspiring individuals in the field. Robert Kiyosaki, known for his book Rich Dad Poor Dad, emphasizes the importance of financial literacy, cash flow, and leveraging real estate to build wealth. Investing in real estate offers a wide range of possibilities, from obtaining a mortgage for your own home to creating a large-scale property portfolio that spans the entire country. While building an extensive empire may be a lofty goal for many, there are countless alternative options available. In this video, we present 3 strategies to consider when seeking to diversify your investments and incorporate real estate exposure in your portfolio. If you're eager to invest in real estate right away, even with limited capital, Real Estate Investment Trust (REITs) can be a great option to explore. These publicly traded companies raise capital by selling shares of stock and issuing bonds. The funds raised are then used to acquire and lease various real estate assets. One of the notable advantages of REITs is that they are required to distribute a significant portion of their after-tax profits to investors in the form of dividends. This means that as an investor, you can enjoy regular dividend payments without the hassle of handling ownership and rental logistics. If you're interested in more hands-on approach to real estate investing, consider exploring crowdfunding platforms. These online platforms allow you to invest in specific real estate development projects, giving you a more targeted investment experience compared to broader property portfolios. With real estate crowdfunding, multiple investors come together to pool their funds and support these development projects. It's important to note that these investments often require longer commitment periods, typically lasting 5 years or more. While there may be options to access your funds earlier, it ultimately depends on the platform's discretion, and you may face early withdrawal penalties. Remember that not all online real estate platforms may be accessible to you. Many platforms have minimum investment requirements ranging from $500 to $25,000 or more. Moreover, some platforms may require you to be an accredited investor, meaning you have assets totaling $1 million or more, or earn an annual income exceeding $200,000. The third strategy is flipping properties for real estate investing. It involves buying homes, renovating them, and selling at a higher price. Flipping takes effort and carries risks, including high costs for renovations and construction to minimize effort. Target homes in up-and-coming areas that require minimal renovations. Renting the property while waiting for home values to rise can be profitable. However, be cautious, as not all neighborhoods may become trendy, impacting your investment's potential return. If you found this video, guys, make sure to subscribe to the channel, like the video, and watch this one as well.